All right, let's cover and go through the things that you really need to focus in on and truly know when it comes to trading supply and demand zones. Now, to all my fellow future traders out there, if you trade the currencies or the indices or commodities, futures, doesn't really matter. I'm going to show you the rundown, pretty much give you tips, some pointers of things that you really need to focus in on that's going to help improve your trading, especially surrounding supply and demand. Okay, so first and foremost, I've been stressing this for years now. I talk about it in all videos, just about before you get started actually trading, do yourself the biggest favor and educate yourself on the concepts. Two of them, which are two of the most important things you really need to know, is understand market structure and price action. Now, I am paying attention to this demand zone resting right. Actually, this is probably a low probability zone just because it broke it and came back. So this zone right here, which is a demand zone, I was looking at it. It may reject this area, it may not, but this was an area I'm going to talk about right here. This was a demand zone right here where the market came to and rejected it and pushed higher. But anyways, this is what this video is about, is to classify, to know which zones make sense to trade from and try to stay away from ones that don't. And it's all surrounding high probability setups based around the structure of the market. What is the market doing? Are we bearish or bullish? Are there unmitigated or mitigated zones? When the market pulls back that we're looking for. Confluence matters because the more that you have, more confluence you have on your side, the better off the trade is going to work in your direction, giving you more of a high probability stance or point. So all trading or surrounding supply and demand trading, but we're looking for key zones. Number one thing we need to really focus in on is the structure of the market. Are we continuously breaking structure to the upside or downside? Supply and demand trading works best when the market is moving in a particular direction. It doesn't work as great when it's ranging, okay? When we're moving kind of like sideways, like how we were right here, chopping around, and then it broke lower. As long as we're moving, breaking structure lower, okay, that's good. If we're breaking structure higher, that's good. Because when the market is moving higher, all right, and breaking through swings, taking out highs, and then pulling back to, say, for example, a demand zone, those could be key areas of interest because we're looking for the market to continue pushing up, so we want to go long. If we're moving lower and breaking lows, then we want to look for the market to pull back to a key area of supply. Just kind of think about it in terms like that. Moving higher, demand. Moving lower, pull back to supply to take a trade going short. So in this case here, the last few days, say in August, okay, which we're getting ready to wrap up, we see the market moving and making moves to the upside, taking out swings here, 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 here. So we're breaking continuous areas of structure above. And as long as we're doing so, then we're looking for pullbacks to key areas of what? Of demand. Just like right here, I'll show you let's see. Right here. This was a beautiful area of demand, rested. We got a break right here, a structure to the upside, pull back, demand. Okay, you see that right there? And then let's see, the market pushes higher, pulls back, break structure higher, pulls back, but it doesn't really, tap into any high probability zone or area of demand. These are low probability areas of demand because they've already been tested, but it still pushes up to the upside. We get a break of structure here, and then the market comes back and it starts testing some areas of demand below. Okay, so I'll talk about being able to weed out and know which zones make sense, and it's all based upon looking at where the structure was broken. Okay, and that leg in which the market, when it pushed higher, broke through that area of structure, and there could be swings or small demand zones resting back in below. Okay, so like right here where it broke structure here, there could be multiple demand zones resting back. You have to think from a logical standpoint, do I want to take a trade at the upper end of a move where it broke structure or where the move started back at? I'm going to show you an example. I'm going to talk about what I was actually looking at, what I actually saw. So for example, right here, let's say this right here. I'm going to show you two examples, and one of them just being most recent. But here's a true example of a beautiful supply area, okay? You see where the market was breaking structure to the upside, okay? It broke this high, and made this high here. Then it reversed or turned back around. You have to look for signals or key identifiers of even when the market is changing direction. That's where it's breaking through an area structure back to the downside. Lots of people will possibly call this a change of character, to where it's now breaking through an area structure lower. Okay, so we broke below this area here at, say, 19,773, leaving a supply area here and a supply area here. Again, if we're breaking structure lower, then we want to be able to identify key areas of supply resting back. This is a push to the downside. We broke structure here and below this area here. Now, I don't trade fib retracements or fibs. I'm just showing you from an example. If you do, use a fib retracement tool to mark off areas or to identify areas, just kind of from a mental standpoint, where the market could possibly pull back to, okay? And you just have to think, just simple common sense. Okay, we got this push down. I see where it broke through a few areas of structure to the downside. All right, I'm bearish. Okay, but what is the areas, or what areas make more sense for you to look for opportunities to go short? All right, is it going to be in this area right here, here, or back up in here in a sense? Okay, but if you use a fib tool, and you can see this is the 23.6, 38.2, 50%, 61.8, and 76.4%. Typically speaking, you want to look for the most, in this case here, because we're breaking structures below. Look for opportunities where there are supply zones resting at, okay, meaning aggressive areas. That's what a supply is, okay? It's an aggressive area of selling where the market is pushing to the downside with swings to break structure lower. So you want to look for areas where the origination, or where there was a starting point in a sense, to where the market started gearing up to push through areas of structure lower. Once it gets back above the 50% area, then my interest starts to spike or peak, because especially when we get up to the 61.8 or 76.4, then I know we're getting back to the upper area where there was aggressive selling where the aggressive selling started it, okay? Particularly speaking right here. That's why I had this zone marked off right here, and I talked about this in a prior video, because we are up here at the latter portion, not ladder, at the upper portion of this move to the downside here, okay? Back up here, this makes more sense, okay? In reference to, you know, the movement of this leg back up to the downside. And we also see swift movement to the downside that aided in this structural break right here. So this is a beautiful area of supply. Now this is a supply area as well. We got aggressive selling to the downside, as you can see here within this swing right here and this swing here. But this right here is definitely a good area. I'm not saying that they can't come up here. They could definitely do so. But what you need to be able to identify is the rejection point, okay? Meaning giving you the confirmation. Now, just because we mark a zone off, again, I'm using multi-chart confluence to be able to get into a trade. I always use and start with a higher base chart to help me identify the direction of the market. If we're breaking structure lower off the higher base chart, then I'm going to mark up a key identifier supply zone, in this case here, to where I can look to continue making a move or take a short with the market, because as it pulls back to a beautiful supply area, I want to go short, okay? Excuse me. So I'm going to mark this zone here. Now the thing is I'm going to move down to a lower base chart to just look for an opportunity of a supply area just as well. Mark the supply area on the higher base chart and looking for one on a lower base chart. In this case here, I'm using a 120 higher base chart and a 24 lower base for my entry. When we move down to the lower base chart, we're doing the same thing. We're looking for a beautiful supply area that's, typically speaking, if you find one that's within this area or this zone, this box here, okay, which is the higher base 120 range supply area, that's going to give you confirmation because you've got multiple means of confluence. A higher base zone, a lower base supply zone as well. You look for the rejection where you get the break in the close of a candle below the last, in this case here, up candle, and then take your shot going short, okay? So I'm going to go down to my 24 range chart, and we're going to look for rejection just as well. One thing to note too as well, as you can see when the market was moving lower, you know, I'm not saying specifically I'm using the VWAP, but I like to use the volume profile to kind of see where volume lied at when it pulled back to key areas. Typically speaking, I like to take trades, above a high volume area if I'm going short and below a low volume area if I'm going long. All, surrounding the idea of selling at premium areas and buying at discounted areas. Okay, in this case here, we're moving more so in a premium area, above a high volume area, and we are below the VWAP. Multiple areas of confluence or means of confluence standing right there. Now, I talked about the zone location in a prior video, but this video is to basically give you a rundown. It's like supply and demand trading 101. Everything that you're going to need to know, in reference to this strategy. I'm walking you through it. We're starting with the higher base chart. We're looking for, first and foremost, the structure of the market. This case here, we're breaking structure below. If we're breaking structure lower, then we're looking for a supply setup to go short. That's what supply is. Again, supply goes short. Now we marked a higher base zone, which is this bigger rectangle box you see right here that we just looked at on the 120 range. Now we're looking for pretty much the same type thing to unfold, just on a lower base chart. The 24 range chart, now we're looking for the market to pull back, to retrace back to that higher base zone that we marked up on the 120 range chart. And then we're going to scale in or move in to look for more of a refined location on the lower base 24 range. Okay, taking my trades from a lower base chart. Now, this is where the market was retracing back. You'll see this on the higher base chart as well. The first tap into the zone here, as you can see, is in this area right here. Okay. Now, if you have a zone that is within the zone, meaning an untapped, unmitigated zone. Okay. That meaning that where there's a gap back at a zone on the lower base chart as well. In this case here, the 24 range chart, then that's going to give you confluence. That's going to give you confluence within confluence in a sense. Okay, so you got the higher base zone chart, a zone you marked up. So if you can find a zone within that bigger zone, okay, off the 120 range chart, so meaning a 24 range zone within the 120 range zone, that's going to give you confirmation. You got means of confluence there. Not all times are you going to have that opportunity. So then you may have to wait for a structural break on the lower base chart, the 24 range, and then a pullback to a newly developed supply area. In this case here, if we look at the 24 range chart and I was to move left, I went ahead and marked up the zone though. Move left, which we're going to do now. All right. So we've tapped into that zone we just saw to the right hand side. We do have a unmitigated, okay, zone within the 120 range zone right here. So I'm gonna mark that up and drag it across. And then once I do that, I'm just going to wait for the market to tap into that 24 range zone. Bigger box or bigger rectangle is the 120 range unmitigated area where there's a gap back on the 120 range supply zone. Same thing, just on a smaller scale. 24 range, we're looking for an unmitigated zone, supply zone, where there's a gap resting back at the zone. Okay, meaning it hasn't been tested yet. Zone, higher base zone, smaller base zone. A zone within a zone is going to raise the probability of the trade working out in our direction. Once it taps into the 24 range zone, it's just a matter of looking for the break and close of a candle below the last up or bullish candle, which is that green candle right here. Break and close of the candle below and go short. Okay, simple as that. Your stop loss, where you're going to place it at the back end of the rejection point after the market breaks with the candle below. Okay, break and close of the candle below. Stop loss goes back up here above that area there. All right, not at the back end of the supply area, or in this case, the supply area in this case here, but at the back end of the area where the rejection took place, where you got the break and close of the candle. Where we're going to be looking to take profit at. Let's go back to the 120 range chart. So that area happened right over here on the 24 range. Okay, we're going to be aiming for gaps to be filled below, or to take the trade back down to maybe if we have a demand zone below us. In this case, we do. See where the market pushed up here? It pulled back and then it broke structure right here. There's a demand zone resting right here. So if you got into the trade Let's go back to the 24 range right quick. Let's say you got into the trade around, I don't know, somewhere around 96, 896, 895, somewhere around there. You're going to be looking to take the trade at least back down to maybe, well, you could, if you try to hold it through 836, that's a lot of points that you could pick up right there if you can weather the storm. Or maybe at least kind of fill some of the gaps in right here within this area. But my first area of getting out the trade would be around about 836, 837, back down to this demand zone. Typically speaking, the market will kind of chop you up. So everybody, that doesn't matter how experienced you are, you can definitely, the nerves will settle in to where it may get shaken out of a trade. So typically speaking, what I do is I like to take, if I can get 20 points, 25 points off the trade, I'll go ahead and get out the trade. That's fine with me. Another thing you could actually do is, if you got multiple contracts on, let's say you got 2 on, take out at 20 points and leave a runner to see if the market can come down and test this 836, 837 area where this demand zone is resting right here on the higher base chart. If you can get that, then you picked up 20 points on the first contract, and then, the remaining portion of that all the way down to this demand zone. This is what I do on a daily basis, and I talk about the same type of strategy, showing example at the example at the example. Especially, if you're part of the elite membership group, which is only $6.99 a month. That's where I go on the trade breakdowns and give you full on in-depth breakdowns of these trade setups that I post over on the Discord. If you scroll down to the description portion of the video, you'll find 2 links there. One, the top one, that first one is the Discord for anyone that's interested in joining. The second one is to become an elite member. You click on that one that says become an elite member, 2 tiers will pop up. Make sure to choose the one for $6.99 to where you gain access to the trade breakdown videos, the video playlist, which is a hand-selected list of videos that I pulled off the channel that pretty much package up the most important video content that you really need to pay close attention to surrounding the strategy. And also, I did a great video on market structure covering it in depth, in detail, so you understand. For $6.99 a month, you're getting a bang for your buck. Trust me when I say that. And there are a lot of people that have signed up for that and are succeeding today, okay? Because they're like instructional based videos that walk you through actual setups so you can see them visually with your own eyes and you can follow and grasp and understanding why I took those trades. Again, to become an elite member to that private group for $6.99 a month is in the description portion of the video. It starts with become an elite member, okay? Make sure to choose the tier for $6.99 so you can gain access to that content. All right, but that's what I wanted to really share with you guys today in reference to, everything you need to know when it comes to looking for great supply or demand setups. In this case here, this is an example of a supply setup. The opposite would be looking for a great area or demand zone just as well, okay? So again, I have tons of videos that cover this same concept on the channel. Spend some time watching the videos. If you're a first-time viewer and you haven't subbed to the channel yet, please take the time to click on the subscribe button. Make sure to make sure to turn on your post notifications, okay, by clicking on the bell next to the subscribe button, or it may pop up once you click on subscribe, so that you never miss one of the uploads here on the channel. I'm telling you, you want to be able to watch this video content because I'm giving lots and lots and loads of valuable information away within the videos for free that will aid you in your trading. Okay, so last but not least, if you found value in today's video, you like content like this, please do me the biggest favor and drop a like by clicking on the thumbs up button. Take care, everyone. I hope everyone has a really safe trading day today. And okay, so we broke through that area. I'm looking at it right now. So again, that was a low probability zone. So, that's why it's breaking through. But now we are breaking structure lower. As you can see right here, we push down, they're low, breaking structure lower. So what would I be looking at now possibly? Let's see, because most of these areas above, these supply areas are already tested. So, yeah, we could test this area right here. This is the latter portion of the move to the downside where we got the breaker structure below this area here. So yeah, it could test here and continue pushing lower. All right, we are bearish. You can see the market with your own eyes. You should be able to look at the trend: low, lower high, lower lows, lower high, lower lows. We're breaking structure lower. So yeah, these are key areas. That's a key area of supply right there. But we are at the bottom portion or the latter portion of this push or leg to the downside. So just be careful we get a retracement back there, okay? But it is a valid supply area at this point, okay? I just talk about those type areas. If you have gaps above, be very careful because they may want to come up and fill in these areas, meaning these gaps back to the upside. So you need to really pay close attention to and make sure you're looking for pure confirmation, okay, for rejection to get into a trade. But that's all I want to share with you guys today. Thank you for watching the video. Take care and trade safe.